in the US, corporate profit cycle has gone from strength to strength last year. The investment cycle is an upswing. By contrast, you look at China, the profit cycle is in downswing, the investment cycle is worsening the downswing. In other words, that economy is yet to stabilize.
Welcome back, dear PWM viewers and readers, to the FT studio for our first tea break broadcast of 2026 with one of our regular guests, Sharmila Whelan, Global Macro and Emerging Markets Strategist at Westbourne Research Services. Sharmila, it's great to have you back in the studio with us.
Thank you very much for having me, Yuri.
How was your Christmas break? It seems a while ago now.
It was very hectic and I'm still tired from it.
What kind of tea have you gone for?
Chamomiles, trying to stay calm.
Back in the new year, immediate invasion of Venezuela, ousting the president there, Trump, and now he's talking about seizing Greenland. We had a piece recently about Trump's unpredictability. What's your take on the whole Venezuela situation, Sharmila? I know you're writing about this in your new report, which is coming out today.
If in 2 weeks they can stabilize the country in terms of a transitional government under Dursi and the opposition hardliners in Caracas is contained, right? They stabilize in 2 weeks. The oil investment from the US comes in. The economy stabilizes, which has been, as you know, a basket case. And in a year's time, they hold a free, open, democratic election, then Venezuela will be remembered as a non-event. But if they went to Colombia, then that could snowball. Then we're looking at possibly another Condo Wars of sorts, and we're looking at years of instability in Latin America, and game is off for investors. The big question is Greenland and what is the motivation there. The US is the only country with a military base there, but if Trump goes after Greenland using a military operation, then we've got a big problem, because it's not only going to break the NATO alliance with Europe, but it's also going to bring Russia and China into play because of their Arctic interests.
Last year, 2025, the allocations to US equities were absolutely phenomenal. I think 70% of some of the equity allocations were to the US. It was a major overweight for you in your predictions, Sharmila. I was speaking to John Flint, the former HSBC chief executive, just before Christmas, and he was painting the picture of the world with a weakening US and a strengthening China. Does that reflect your view of the world in terms of the economies and the markets?
In the US, corporate profit cycle has gone from strength to strength last year. The investment cycle is an upswing. By contrast, you look at China, the profit cycle is in downswing. The investment cycle is worsening the downswing. In other words, that economy is yet to stabilize. Right. Then you add the structural elements, and here we're talking about balance sheet strength. You look at the US corporate and household sector, they're deleveraging, right? They're under leveraged. China, of course, we know the story with the corporate sector. So from a cyclical point of view, my money would be on the US ahead of China. But when you're looking at the secular, and here I'm talking about the big waves, like the Kondratiev technological waves, which we are in the midst of the sixth wave, which these waves last 45 to 60 years. This one is being driven by AI, the green transition, robotics, and there China is winning the war.
So long term, the stories about China.
Yeah, and as an investor, whether you're a family office or a fund, it depends upon your risk appetite and duration.
There was wall-to-wall coverage on Chinese media about the comments of the Japanese Prime Minister about Taiwan, and this was pretty much what everybody was talking about. The family offices were talking about that as well. The tourists were cancelling their vacations to Tokyo for their sightseeing. What does this mean for the Japanese economy? I mean, very intertwined with China, and a lot of private banks had really significant allocations over 2025 for their clients to Japan, and I know it was also one of your recommendations. You overweighted Japan, Korea, and Taiwan. All three performed brilliantly in 2025. What are your thoughts on these Asian markets for 2026?
I'm not focusing on the geopoliticals. My investment recommendations are on the business cycle fundamentals. And if you look at Japan, the fundamentals are strong. Japan, along with the US and Taiwan, were the three countries where the profit cycle, corporate profitability strengthened through the course of last year. Investment cycle is in upswing. The cost of capital is really, really low. So from an economy point of view, and therefore corporate earnings growth, which is what really drives equity markets, it's an overweight. If there is a correction because of these tensions with China, it's a buy opportunity.
The sector-based allocation is very important as well, and you mentioned the AI competition between the superpowers earlier on, and we had an opinion piece by Nigel Green, and he's talking about the sense that many leading stocks have been overhyped, that the market is moving from a phase of imagination to interrogation, he called it, that the coming year will not forgive those companies that overpromise in terms of technology. Is that a fair comment?
Last year, there was the tariff war in January. You worried about recession, inflation, you worried about the tariff war if you were consensus. This year, what do we know? The tariff war is over. Fiscal policy is easing, monetary policy is easing. Fiscal policy, you look at Trump's one big beautiful bill in Europe, it is the spending on defense. The question of scrutiny would have been more last year than this year. I think what investors are concerned about is the tech sector and the AI sector and the Magnificent Seven. But again, I think you need to put that into perspective. If you look at valuations, right, for the S&P 500 tech sector, it's about 25 to 30 on PE. .com, the trailing PE on NASDAQ at the peak reached 200 times. And remember, NASDAQ, most of the companies in the internet complex during that .com boom either had no earnings or very little earnings. So these price rises were completely driven by multiple expansions. Very different today. All the big AI companies are profitable, hugely cash generating. And again, debt is very low now as it was back then. The problem was they ran out of cash, and interest rates rose, which led to a tightening of liquidity. And that's why you had the .com bust. This time around, debt is low, but they're also spending at a furious rate. But remember, the Magnificent Seven have got cash and equivalent buffers of about 500 billion. If you get a correction, it's an opportunity to buy. It's a healthy correction, but a crash is something I'm not expecting.
I mean, you've been quite accurate on a few of your predictions for 2025, Sharmila. And I remember one at the beginning of last year, and you said to me that Bitcoin will become a US reserve currency. And I think I stopped in my tracks. I said, can you repeat that, please? And we're not too far from the truth there. Do you have any similar show-stopping predictions for 2026?
Right now, two. One is I'm not looking for a crash of the AI complex, even though valuations are frothy. Second is, if there is a correction, it is an opportunity to buy. Broader investment strategy for 2026, I'll be setting it in February when I have the fourth quarter data to update all my business cycle indicators with some fundamentals driven.
So thanks very much for joining us today and wishing you success in the year ahead.
Thank you very much, Yuri.
Sadly, ladies and gentlemen, that's all we have time for in this week's tea break. So please keep reading our stories on pwmnet.com. Send me your questions, and we will see each other next week when we will focus very much on family offices and how they are approaching 2026.